will remain elevated this year despite inflation reduction forecasts. This is owing to the government's increased appetite for dollar-denominated loans that is crippling the economy. This is according to Sanlam's Deputy Chief Investment Officer, Dan Gathogo, who says that a reduced tax revenue situation alongside the depreciating shilling is pushing investors away from government bonds to short-term treasury bills that mature faster, while local investors are increasingly seeking dollar-centric and foreign investment options. And as Hibak Saeed now reports, the government bonds seem to be losing hold in the investment world. Take a look.
The market performance of local equity as at last year was at negative 21.5%, denoting the poor reception of the Kenyan investment topography to foreign investors, which translated to a sharp decline of the foreign direct investments to $500 million as at last year, in contrast to $1.6 billion in 2018. According to Sanlam's investment forecast, this is set to drastically reduce to an average of negative 10.1% in the next 3 years, denoting, hopefully, an increase in FDI inflows. Should this, therefore, be a cause for celebration for Kenyan businesses? Well, not quite.
The one-year treasury bill closed at somewhere close to about 15%. Is what in the dotted line. I think the message from that slide is that, yes, we still expect interest rates to edge upwards.
When projecting the volatility or lack thereof of the world of investment, many aspects come into play.
So we expect the Kenya shilling to continue depreciating in 2024, but in a very gradual manner compared to 2023. And yes, it's true, we've seen many Kenyans start to look at foreign currency denominated investment options in US dollars. And what they're looking at is return.
Expectations for growth is resilience again for 2024. How slowdown in global economies.
According to an analysis shared by Sanlam, the market performance of offshore equity within a span of 10 years would grow exponentially from 1.5% to 11.4%.
And the environment and is compliant with regulations, you're more likely to have a good long-term prospect.
This double-digit leap means that a lot of local investors are looking at foreign markets as better investment options due to the steady decline of the Kenyan shilling. This as government bonds loses popularity, with projections showing its decline as an investment option from 58.3% to 16% within a range of about 10 years. However, the coming bumper harvests are set to forecast good tidings for the investments as the year progresses. Businesses, however, should still hold their breath, as the Sanlam projections now indicate that inflation might surpass the CBK upper limit by mid this year. Despite a reduction in inflation rates in this year and the coming year, we're seeing a lot of interest rates from the banks rising. This as a lot of local investors are looking towards dollar-denominated investments. Hibak Saeed for TV 47.